So as this pandemic worsens, millions and millions of Americans are skipping their credit card payments, and that is actually forcing many banks and lenders to, prepare for perhaps worse economic fallout. So to talk more about this and more about what you can do is Jill Schlesinger. She is our CBS News business analyst. Thank you so much for joining us, Jill. It took like a really quick Google for me to find a ton of stories of people who are trying to figure out ways, not to pay their monthly payment on their credit cards because they had, people had problems with credit cards before. They were struggling under the weight of their credit card debt before. I can only imagine that this pandemic has made it worse.
Yeah, it's really crazy, actually, because the credit card bills that were accumulating started to pile up. And before the pandemic, we were actually at a 7-year high of credit card delinquencies. So obviously, with 26 million Americans claiming for new unemployment benefits, we know that this is going to be even worse when the next round of data start to pour in. Now, here's the issue. The credit card companies have been instructed by the government to give what's called forbearance, which means breathing room, no fees and penalties, give some people a little bit of leeway in paying things off, certainly no extra stuff piled on. And that is actually causing some problems for the credit card companies themselves. Not that anyone really feels bad for them, but, listen, they employ a lot of people also. Stock prices of some of the big issuers are taking a much bigger hit than other financial service firms because they know that many of these credit card accounts will not be able to get paid in full for a very long time.
So I guess, Jill, how are the banks and lenders being affected just sort of long term?
Well, I think that if you are a big bank and your main business is credit card, then you're going to take a hit. When you look at a big banking center like a JP Morgan Chase, they're not just issuing credit cards. They're doing a lot of other activities. And, when you think about it, the firms that are out there and they are, they've benefited for essentially 11 years of an economic recovery. So this is part of their game plan that they know they've got to plan to write off loans when the economy turns. The question really is how long this lasts, and that we don't know yet. Because the sooner that more of these people get off these unemployment benefits, get back to work, the better they'll be. But I don't see that happening as quickly as many others do.
But it seems like some of the lenders and some of the banks that run these credit cards are giving people a bit of a break here and there.
Right. I mean, forbearance is wonderful, right? You say, okay, don't pay this bill for 3 months, right? You maybe say a 90-day reprieve. But there are also reports that many of these companies are being quite squirrely when consumers actually call them up or get in touch with them. They say, okay, they're waiving their late fees, they're waiving their interest charges, but then they are creating a balloon payment that's due at the other end of this. And what they're also doing is, and I think that wisely, of course, if you're running a business, is they're shutting down lending facilities, meaning you might have thought your credit limit was $12,000, and the issuer might say, well, you know what, it's actually $5,000. And they can do that. It's perfectly legal. But before you start running up your credit card bill, be sure to understand what is your limit and what are the rules surrounding this forbearance period.
Jill, a lot of Americans are saving their stimulus checks because of life essentials instead of paying down debt. Practically speaking, is there a priority between paying off debt and saving for essentials? What's the good balance that people should be thinking about for those who are skirting on the edge?
I think if you're on the edge, if you're unemployed, if you've been negatively impacted financially from this pandemic, it's all about conserving your cash. So I would not be in a rush to pay down any debt at all. And I've been fielding questions from my podcast every single day, and I have found that people really want to try to get rid of that debt. And I'm saying, look, in normal times, I love you to pay down high interest debt. These are not normal times. We're at the extreme. You've got to conserve your cash for a rainy day. It's not a rainy day, my friends. It is pouring. It is a storm. It's a 1 in 100-year flood, it's a hurricane, and it's a wildfire, and it happened all at once. So the time to actually pay down your debt, will be when we understand what your financial condition is, probably in the next 60 to 90 days. For now, do not be in a rush to pay down any debt. Conserve your cash. Do prioritize your bills. There's a great tool on the Consumer Financial Protection Bureau's website, consumerfinance.gov, or if you just Google Bill Priority Tool, CFPB, you'll see. And the only thing that I think is your priority right now is feeding you and your family. Everything else is negotiable.
So then this isn't a time to sort of worry about pulling yourself out of credit card debt, or, maybe you have a regular paycheck and maybe this is a good time to do that.
Okay, so let's draw a distinction. You have a job, it seems secure, you've got the cash flow. Now, if you can, and you can start accelerating that debt payment, fantastic. Same with your student loans. There is no interest being charged on federal student loans until September 30th. If you've got extra cash flow and you can pay down a 6% student loan, this is a great time to do that. If you have extra cash flow and you've got a 16% credit card bill, sure, it's a great time to do that. But if you don't have 6 to 12 months of your living expenses sitting in a safe place, please make that the #1 priority.
Jill Schlesinger, always bringing the knowledge when we so sorely need it. Jill, thank you very much. Appreciate it.
Thanks.